The Bank of Japan has decided to stand pat on its record monetary stimulus as it gauges the impact of its minus interest rate policy. With a wave of central banks set to hold meetings this week, Korea's monetary policy remains in question. Hwang Ji looks beyond the numbers.
Bank of Japan Governor Haruhiko Kuroda and fellow board members left the benchmark rate unchanged at minus 0.1% on Tuesday, while keeping the annual pace of asset purchases at 80 trillion yen, or roughly $700 billion. It was a widely expected move after Japan's central bank surprised markets by introducing a negative interest rate policy in January. The BOJ reiterated, however, that there could be more easing if necessary, especially to reach its 2% inflation goal. This, in turn, is putting the pressure on Korea's central bank to take additional easing steps to prop up the economy.
The key rate should be adjusted according to a country's economic conditions. I think Korea has room to cut the rate to 1% from the current 1.5%.
But as recent easing measures by major central banks like the BOJ and the ECB have not resulted in what they intended, with markets overall reacting negatively, some analysts are more concerned about the side effects that aggressive easing can bring about. And it's a big week for central banks, with the BOJ's announcement followed by the U.S. Federal Reserve and the Bank of England. The market consensus when it comes to the Fed is that it's unlikely to raise interest rates this month, but it might offer signs of scaling back from its earlier forecast of 4 or more rate hikes this year to 2 or 3. Hwang Ji, Arirang News.